Welcome back. Fannie Mae's latest housing market forecast, just announced today, is calling for home sales to fall to a 15-year low, the lowest levels since the year of 2008. They also provide their predictions for mortgage rates, home prices, and much, much more. So I want to share all the details in today's video. So thank you so much for joining me. Let's begin here. It says here, and this, by the way, was just posted on October 16th, which is today here. It says, while incoming purchase mortgage application data have highlighted the downside risks to housing activity amid a mortgage rate environment that is well above 7% right now, home prices have proven more resilient than expected. So they're saying here that application data for people who are using loans to buy houses, that, by the way, is based on a new report announced last week from the Mortgage Bankers Association, or the MBA, in which they stated that the current levels of applications for home loans is more or less on par with the lowest levels going back to 1995. A huge pullback in demand due to an increase in rates. And speaking of rates, let me just share a very quick update for you guys as well, because rates increased big time on Monday, which again is today at the time of filming this video here. It says, as of today, according to Investopedia.com, the average 30-year fix for people with great credit is at 8.07%. Absolutely insane. Also, according to the Mortgage News Daily, the rate increased to 7.80%. And again, this is only for people with great credit buying a primary residence and also putting down at least 20% in order to buy a house. If you're putting down less than 20%, or if your FICO score is less than 740, for example, your rate will likely be higher than these rates on their website here. And by the way, at 7.80%, that's a giant increase of 14 basis points compared to Friday, and also very close to the highest levels since October of 2000. So excluding one day, which was October 6th, I think it was not last Friday, but the Friday before that, the average rate then was at 7.81%, but now at 7.80%, excluding that one day, the highest levels going back to October of 2000. Just absolutely crazy. Also, 1 year ago, the average rate was at 7.16%. This means rates on average have increased by about 64 basis points, or 0.64 percentage points compared to 12 months ago. Also, when looking at this chart above here, when looking at weekly rates according to Freddie Mac, because by the way, the Mortgage News Daily only goes back to 2009, whereas Freddie Mac goes back to the 1970s. But the current rates right now, the highest levels since mid-October of 2000, when the average rate was at 7.83%. So going back to Fannie Mae's latest real estate market predictions here, saying here that home prices have proven more resilient than was expected. This is causing an upward revision in their forecast for 2023. So let me just kind of break this down for you guys. For the third quarter this year, home prices increased at a much faster pace than they were expecting. And because of this, they're now predicting that home prices will actually be higher for the entire year this year compared to the previous forecast that was announced 1 year ago. Let me share that with you right now here regarding their home price index. So home prices in today's video is based on Fannie Mae's Home Price Index, or their HPI. This is a measure of home prices for all single-family houses nationwide, excluding condos. So in regards to home prices, take a look at this. This is our forecast 1 month ago that was just posted in mid-September here. So their forecast for home prices, again, based on their HPI, this third quarter compared to the third quarter of 2022 was an increase by 3.5%. That was 1 month ago. Look at their most recent forecast though. For the third quarter this year, 5.3% versus the 3.5% last month. Therefore, because home prices increased more than was expected this third quarter, their forecast went from 3.9% gain to a 6.7% increase in the fourth quarter this year compared to the fourth quarter last year. So last month in September, their forecast was a 3.9% increase in prices overall this year. Now they're expecting a gain of 6.7%. Now, having said that, they are expecting that home prices will decelerate in 2024. In other words, still increasing, but not increasing at the same rate this year. In regards to new home construction and sales of that, it says new home sales continue to hold up comparatively well as the lack of existing houses for sale is driving many buyers to buy brand new houses. Home builders continue to buy down rates, of course, to help drive sales while enjoying sizable margins, especially in the light of softening in building materials. Still, though, the National Association of Home Builders, or the NAHB, cites that builder confidence for building new single-family houses decreased in August as well as September. That ended 7 consecutive months of increases this year. Also, according to the U.S. Census Bureau, new home sales, which is defined as a contract being signed between a builder and a home buyer for the month of August, announced about, 3 weeks ago, actually decreased by 8.7% compared to August of 2022. Fannie Mae's real estate market predictions is predicting here that home sales for new single-family houses and housing starts will decrease in the coming quarters, but they will remain comparatively strong relative to existing sales as inventories still remain tight, historically speaking. Fannie Mae also provided a summary regarding their forecasts in 2023 through 2024 regarding housing starts, home sales, home prices, mortgage rates, and much, much more. So here's a summary for you guys. These figures right here is based on seasonally adjusted annualized rates for housing starts, and also there are in thousands of units as well. So for example, in 2022, there was 1,553,000 housing starts for the entire year. Compare this to the third quarter this year, their forecast was just under 1.4 million. Then it decreased to just under 1.3 million in Q4 this year. What I'm more focused on is single-family housing starts though, and not multifamily though, because total housing starts includes, of course, single-family plus multifamily. So in regards to single-family housing starts for this year, they're predicting a 10.2% decrease in the fourth quarter this year compared to the fourth quarter of 2022. Then in 2024, another decrease down by 1.7%. Look at the difference compared to multifamily though. This is 2 units or more. Giant decrease of 14.4% this year. And then next year, a giant decrease of 24.5% versus only a 1.7% decrease for single family. Okay, let's talk about home sales because there's some very big changes here. And I'm going to provide some context regarding how low these numbers really are here. So for new single family houses, they're expecting a gain of 4.7% this year, and then to be more or less flat next year. Look at single family though. Single family houses, condos, and co-ops. So for the this year, their real estate market predictions is a decrease of 17.8% in the number of existing home sales this year compared to last year. Then in 2024, a decrease of 0.2%. Now here's what I noticed, which Fannie Mae did not mention in the report here. They're calling for only 4,134,000 existing home sales this year. Then in 2024, a decrease once again, now at 4.127 million. So here's what I did for you guys, because I want to provide not only regarding the year-over-year changes, obviously it's down greatly compared to 1 year ago, but how does 4.1 million compare to previous years going back to the early 2000s? So I looked at the number of closed home sales of existing houses according to the National Association of Realtors, which by the way is the same numbers that Fannie Mae is using. So for example, 2022, just over 5 million existing home sales, which also agrees to this right here, 5,030,000 to be exact. So here's what I found, which is I found to be really interesting here, because in 2023, again, their forecast of 4,134,000. That would be the fewest existing home sales going back to the year of 2008. In other words, a 15-year low of home sales this year. I would say this would be a housing crash in the number of home sales. Then in 2024, at 4,127,000, also on par with the lowest levels going back to 2008. And by the way, in 2008, we had 4,110,000 home sales compared to just over 4.1 million is a forecast this year and next year. Also, just to provide some context regarding how this compares to years past, this is going to be an 18% decrease compared to 2022. And their forecast for 4.127 million in 2024 would be a decrease of 18% from 2022. When looking at levels, looking at pre-pandemic levels, I should say, their forecast this year would be a 22.6% decline. And then in 2024, nearly a 23% decrease. So just taking a step back here, it's pretty wild that they're forecasting to be a 15-year low regarding sales nationwide. Very big changes compared to the giant increases we saw in 2020 and 2022, at least the early parts. So for example, in Q1 of 2022, nearly 6 million home sales. Again, that's seasonally adjusted. And then it decreased to 4.3 million in Q1 this year, and then to decline to just under 4 million closed home sales in Q1 of 2024. I mean, how wild is that? That's nearly 2 million fewer compared to Q1 of 2022. Okay, let's talk about their real estate market predictions for home prices based on their HPI. Their home price index, by the way, only includes single-family houses and excludes condos. So the third quarter of this year, we saw a gain of 5.3% versus their previous forecast, which was last month. Again, their forecast was 3.5%. So because of this bigger than expected home price changes here, they're now forecasting that home prices will increase by 6.7% this year compared to the previous forecast of only 3.9%. Also, 1 month ago, they were calling for prices to decrease by 0.7% in 2024. Now, they're calling for a gain of 2.8%. Now, I would love to hear from you guys regarding this because they're calling for prices to still increase overall in 2024 and also to increase every single quarter next year when we have rates at around 7% for the entire year 2024. In fact, their forecast overall for rates this year for the entire year is at 6.8% for a 30-year fix, and then to increase to 6.9% in 2024. In fact, when we look at 2024 for the forecast of rates, relatively flat, going from 7.1% in Q1 to 6.7% in Q4 of 2024. So please leave a comment below with your thoughts regarding this, and also what is your real estate market predictions as well. I'd love to hear from you guys. Thank you so much for watching today's video. I appreciate you. Like and subscribe, and we'll see you in the next video.